Hello there, this is binaryoptions.net.au, and we are continuing our timeless educational series here on how to trade a specific currency pair. So far we discussed the Euro US dollar, we discussed US dollar, Canadian dollar, Australian dollar, US dollar, and Great Britain pound US dollar. It is time to move with one of the most popular currency pairs, and I'm talking about, of course, the US dollar and the Japanese yen. Why one of the most popular? Because it has some characteristics that other currency pairs don't have. One of the most important characteristics is that it is linked to the equity markets in the United States and all over the world through all these algorithms that are buying and selling automatically equities, and the ES and so on are being pushed higher or lower. Now, like any other currency pair, it is reflecting the differences between two economies it represents, namely the United States and the Japanese economy. And if you want the Japanese economy, so if you want to trade this currency pair, you should be aware of the economic news that are being released in US, when and what are those news, and what's happening and what matters the most in Japan. Today, nowadays, for example, what matters the most in Japan is not necessarily the how the Japanese economy is evolving, but how the monetary policy is adapting to that evolution on the Japanese economy, because quantitative easing in Japan is more importantly than say how the economy is evolving. So it moves based on the differences between US and Japanese economy. So this is the first thing to consider on the US dollar and the Japanese yen. Now, another thing to keep in mind is that, like mentioned earlier, this is moving strongly correlated with the US equities and with the overall equity market in the world. Therefore, whatever the data is about to be released in the United States and is supposed to influence the equity markets like the S&P 500 or the Dow Jones will influence the US dollar Japanese yen as well. So keeping an eye on what's happening with the equity markets should, let me try to put this one a bit on the left side, should keep you on the safe side with the US dollar and the Japanese yen as well. So number two to consider here, or the second thing to consider, is keep an eye on the US equity markets, as the correlation degree is positive first of all and strong. It means that if the US markets have the tendency to move to the upside, then the path of least resistance for the US dollar Japanese yen is to move to the upside as well. One thing that mattered the most lately was the quantitative easing program that we mentioned a bit earlier, that was launched in the US and Japan as well, as a matter of fact. But the one that is still on the deck is the Japanese quantitative easing, because the one in the United States is already retraced or tapered. And now we have only the QE in Japan and in Europe, of course. But this being US dollar Japanese yen, the one in Japan is more important. It should be noted that based on the fact that the Japanese are still trying to devalue their currency with this Bank of Japan buying all the JGBs that are being issued by the government, by the Japanese government. So it should be noted that the path of least resistance on the US dollar Japanese yen on the medium to long term, as long as this QE exists, is to the downside. So watch for QE related news out of Japan. Of course, interest rate decisions are important as well, but nobody's going to raise rates before ending the quantitative easing, like it is the case in the United States. Now it is the talking that the Federal Reserve is going to raise the rates in the United States, but first they needed to end the quantitative easing, and only then you may move into hiking the rate. So the interest rate differential already is quite strong, quite big between the two currencies here. Bottom line is that any dip in the US dollar Japanese yen should be short-lived as long as QE programs are still here. So any news related out of Japan that market is about that the quantitative easing program is going to be changed or finished or closed or done, then should influence the pair. Other than that, other than these three important things, out of Japan, one should look for the following. Bank of Japan, interest rate decision, and monetary policy. Like any central bank, like any major central bank, Bank of Japan, it is meeting on a monthly basis, trying to assess what happened in the economy on the previous month and trying to set the monetary policy for the period to come. Now, this is the main pillar of the monetary policy, what the members of Bank of Japan are doing, and it is valid for any central bank in the world. So if you are looking for statements for ending the quantitative easing, or for increasing the QE, or for altering the monetary policy, the previous monetary policy, then at that moment of time will be a good time to look for. And besides this, there is the now famous Tankan report. The Tankan report is the equivalent in the world of, actually I don't think it has an equivalent, because it is a bit more different both in construction and in the concept that is used to analyze it. It is making a diagnosis of the whole economy, and it is a vital tool in deciding if a specific sector or a specific economy is in bullish or is in contracting or expansionary territory. Therefore, the central bank will guide its interest rate decision or monetary policy based on that. If it is expansionary, it will hike the interest rates. If it is contractionary, it will lower the interest rates. Hence, the currency and the currency pair and the currency as a whole is going to be moved. And of course, being a currency pair, besides the Japanese related news, we have the standard US related news. So out of the United States, we look out of what? Out of core CPI or the inflation. We also look all the time at the non-farm payrolls, as this is the jobs data is released on every first Friday of each month in the United States, and because the Federal Reserve in the United States has a dual mandate, namely to keep inflation below or close to 2% and to create jobs, then what is happening with the jobs market in the United States is vital for the whole world, because if the Fed is raising rates or the Fed is cutting the rates, the other central banks in the world will follow suit. The GDP, of course, or the gross domestic product, as it is released on a monthly basis. And last but not least, ISM, both manufacturing and non-manufacturing durable goods. And then second tier data like retail sales. Retail sales is not a second tier actually, and so on. Well, these are the things to consider when trading the US dollar Japanese yen. And these are the things from a fundamental point of view, understanding how the currency pair is being constructed, and more importantly, keep in mind that this is a major pair and not a cross. Thank you guys for being here, and make sure you check our YouTube channel and all the analysis that we have there, as we're trying to do our best to guide you through successful trading. Bye bye.